Hello everybody, welcome to TraderMerlin Show. It is your weekend edition. It is Friday. Cheers to everybody. Hope you're all enjoying the beginning of a great weekend. I see we've got a bunch of people in here. So Alex, Jorge, Helena as well. We've got Ivzy, Simon, Thomasina, Les from Cape Canaveral. Good to have you with us. Ron and others drinking Big Ab. Daryl as well. Daryl with the Kettle One and ginger today, huh? Nice. Normally I would be something like Brian at the top, which is the cold ginger Jim Beam. Of course, Richard as well. And Richard, thank you so much for the comments. Yes, I am always happy to bring on other people in the industry, so feel free to sign them up and send them my way. I will do my best to get that gentleman that you mentioned on the program, because why not learn from as many people as we can? That's really I think what I'm trying to do with this show is say, hey, I don't care which path you decide to go down, but let's just introduce you to as many people and get you thinking in the right way, having the right mindset. That said, today's going to be a great show. We've got a good friend of mine on the program. I met him years ago with Online Trading Academy, and he's gone on to do his own show now, as many people are doing. Joining us from the great state of Florida to talk about choosing a trading strategy, we got Mike Siewruk with us today. Mike, how you doing? Your mic's muted. You just muted your microphone, that's all.
How about that?
Perfect. Sounds fantastic. Good to have you on, my friend. How you been?
I've been fabulous, and I want to thank you for this invitation. It's been a long time.
Yeah, well, you know, I'm trying to make it more regular for some people. I feel bad asking all the time because, you know, you guys are out, you're doing your thing, everyone's doing their own thing, but I think it's a way for us to stay in touch with the community of traders and, you know, show your wares and talk markets. So let's do something real quick to start off. I like to do something called the Trader's Profile when it's your maiden voyage, and since it's your first time on this program, let's do it. Let's talk about the trader profile for Mike Siewruk. We want to talk 3 questions. Number 1, how long have you been trading? Number 2 is, what type of trading style would you call yourself? And then, which asset classes do you trade?
Okay, so I started 22 years ago in 1999, which was the best time to start trading and the worst, and I'll explain. It was the best because you could throw a dart at a .com or a tech company and make money. It was just fabulous. Anybody who was trading back then knows. But it was the worst time because you didn't really need to understand what you were doing. So you made all this money and you thought you knew something. And in the end, you figured out, hey, I don't know what's going on. You know?
So you mean you were a GameStop trader then?
I don't know about that, but no, it was just serendipitous to be in the market then. It was easy to make money, and once the market changed character and you had to really understand what trading was all about and the psychology of it and the risk management of it and the things that are really important, that's when my learning started. So yeah, 22 years. And my style is a combination of day trading. I day trade the S&P futures using volume profile. That's volume at price, and obviously those are very short-term trades. And for my longer positions, I use options. So I'm trading futures and options, day trading, swing trading, and position trading options. I happen to like leaps rather than the actual equities themselves. Not a dividend trader, so don't care about owning the stock. And I don't have Buffett's money, so I don't care about the votes. Yeah. But the leverage in leaps is nice.
All right, cool. So what I like, and this is something I found that happens with most traders, is when you start off, you're usually a one-trick pony, meaning I'm a day trader of stocks, or I'm a swing trader of futures, or I'm a longer-term options guy. It always seems like we pigeonhole ourselves. And the guys and gals who've done this for a long period of time, you realize that there's different tools for different markets and different asset classes. For example, I would say I trade short-term all the way through long-term on equities. Options, I would say I'm more of a swing trader. Futures, I would say I'm more of a day trader. Maybe slight swing if the day trade works out well. Currencies, I'm thinking longer term with regards to my long-term currency trades. But, you know, we start to realize that these other asset classes all provide us with opportunities out there. And I love it. You said day trading S&P futures, swing trading options, which, of course, I think means you're certainly looking at the underlying stock market as well.
Absolutely. Equities and ETFs, options on equities and ETFs. But, you know, what you just encapsulated there is an excellent trade plan. Yeah. It's multiple time frames and it's multiple asset classes, because I'll tell you, I'll take you back to 2017. Day trading the S&P was painful. This thing had an average true range on a daily basis of about 12. You're not making any money even with the leverage in futures at that. So you have to have diversification of trading strategies to be able to stay in business, so to say.
Yeah. Let's talk about that. I think that's the topic du jour, which is trading strategies and choosing a trading strategy. And I'm going to go to Pepe's comment here. He just posted this one, which I think is great. He says, I noticed that most OTA instructors, that once they leave OTA, they reveal that they don't trade supply and demand. I would actually correct you on that, Pepe. It's not that they don't trade supply and demand, but they're using it in conjunction with many other things. And the challenge with what we were doing with OTA is, if you just took core strategy or something like that, you're learning a basic system, right? So you can't deviate from that. You have to keep hammering that topic till you get that down. And then, there are other programs wherever where you learn other things. But I would say that almost everybody that goes through that, instructor or students, would agree that supply and demand is what is driving price. If you don't believe that, then you don't understand how price moves, because it's irrefutable. Demand is the buyers, supply is the sellers. If they're not there, then price doesn't move. So it has to revolve around that, almost like a foundation, right? And then you build whatever you want on top of that. And I think Mike does a great job with his program in explaining, look, there's a lot of other strategies out there that we want to look at for different market timing and different market environments. So let's talk about that. Let's talk about choosing a trading strategy, Mike. I'll let you start off with this one. Where do you want to go with the trading strategy?
Well, the first thing I want to do is kind of back up what you said. When I trade, what I like to see is what I call a confluence of evidence. And supply and demand based on OTA core strategy is one thing that has some edge, and you gotta use it. And I also like volume analysis, because if you think about the markets, okay, you're trying to beat the market, and the market only has three variables: price, time, and volume. Everything else launches off of one of those three variables. So I'm a big fan of adding that third one, volume, into getting my confluence of evidence. Mm-hmm. Yeah, and then you got chart patterns that are not core strategy, like Jeff Manson, Dan Sugar, a lot of guys use these, and they add to your edge in the market. Yeah. So anyway, just wanted to pat you on the back for that.
Yeah, I agree. It is a and I agree with you 100%. It's about a confluence. Now there's two things here. Mike's right. Confluence of evidence says, let's put as many decision points or factors in my favor. In every one of those little pat on the back saying, yep, you're on the right track. Yep, or it could be that they're turning against you. What you don't want to do is have so many decision points that you're looking at that all of a sudden you're like, I don't know what the hell to do because I got so many things I'm looking at. So you can overwhelm yourself by trying to get confluence. So, you pick a few things. Mike will probably tell you about what the basis of his strategy, but find a few that you like to look at and then work with that. Don't try to look at everything or you'll never make a trade.
Yeah, no question, because what you have to have, and everybody already knows this, but what you have to have is a plan, a rule-based plan. And if you have, like Merlin said, too many rules, then you'll never get there. You'll never pull the trigger. So keep it simple, but do include more than one data point or two, right? Mm-hmm. So we like to add volume in. Now, getting back to how to choose a strategy. When I teach trade planning, the first thing that I ask everybody, and it's at the top of the list for how to choose a strategy, is how much time do you want to devote to this endeavor? We're not talking money yet. We're not talking entry-exit rules. We're not talking risk management yet. It's how much time do you want to put into it? Mm-hmm. Some people are working. They're busy. They can't day trade. Some people don't want to day trade. I used to be a day trader, like literally 6.5 hours a day in front of the computer. I would never do that again. I just don't want to. And I like lifestyle, so I like to be able to peg times of day when I'm going to be looking at trades and executing them. I like some set and forgets overnight when I'm sleeping. And then I like the options market for carrying for days, weeks, and months. Mm-hmm.
Brendan added something here. I'm going to dovetail it in the conversation because I think it makes a good point. He says, Merlin, I remember reading about this one big trader at his hedge fund. Apparently, before every trade could be placed, you had to write a full-page rationale about why the trade was worth it. Isn't that what we are doing or should be doing on a daily basis for all of you out there? I don't see you have to write a one-page, but you certainly better present this, quote-unquote, present your arguments to the judge about why you're buying this thing or shorting it. And if that argument is not strong, you'll know it. I mean, you got to look, and again, it's not just why I want to buy a security. It's also, on the other side of that, what are the factors that could go against me, right? So to me, always objectively step back and say, I do two things. I say, I'm going to buy this. Why am I buying it? And then I flip it over and said, let's say I'm going to short this. Why would I short it? And if the arguments are all of a sudden better for the short side, then I'm going to go short, not long, or just not make that trade long at all.
Oh, I like that. That's good juxtaposition. Anybody who was with OTA knows, if you ever went through Power Trader Nation, that I blogged every single trading day my trade plan for the S&P futures, and I put a lot of time into the planning of it. But more importantly, Dr. Woody Johnson taught me years ago that what you really need to put more time into is the review side.
Yeah.
You know, I can plan all day long, but if I don't follow it, then I'm not going to get the reward. And I won't know if I'm following it unless I look at a review. And so I actually capture, most people laugh at me about this, but it's true. I capture 43 data points on every single trade of my strategy, regardless if I took the trade or not. So, you know, I've got this incredible database that I can go into and ask questions and say, hey, where's the edge? You know, where should I be getting out? Are reversals better than breakouts? Does time of day matter? All these things. And it's all empirical evidence because it was the real market and captured. So that review process is priceless.
You know, and obviously I'm not going to ask you to go through all 43, but I'm just kind of curious. Can you give us a couple examples when you say 43 data points? You know, is there, I can't tell you offhand of how many different things I'm looking at, but it's interesting to me that you know precisely that number, and I think that that's a good thing because you want to know what elements you're looking at. Well, give me an example of what some of those data points might be.
Okay, so you know if you're trading core strategy, you're getting in a level and you're hoping to get out at the next level, the opposing level. So there's a risk-reward profile between those two levels. If you're risking $100 and the next level is, say, 800 away, then you've got an 8-to-1. So I capture that for every trade, and I'll tell you what I found out. Now, this may sound logical, intuitive, and you didn't need to hear evidence to believe it, but the fact is, scalping that strategy, going in and grabbing 1.5-to-1 trades doesn't work. You got to have more room to get to the next one to really profit, so to say. So that's just one data point. I like time of day analysis. I've got over 8,000 trades in this database, and I can tell you that trying to pull these things off after 2 in the afternoon Eastern time, you are probably going to be breaking even at best.
You know, it's funny. That's one thing that the viewers that watch this program know it well because I talk about it so often, but you know, one thing that I just never knew about was time of day. And until I actually went back and started through Excel spreadsheets, graphing and showing my trading activity over the course of a day, I would never have known that is predominantly where I'm losing my money is middle of the day. That said, and I don't want you guys to hear that and go, well, shoot, I better stop trading in the middle of the day. No, absolutely not. What you need to do is look at your data points, because you look at somebody like a Roger Best, he makes the best money for him is in the middle of the day. And, you know, it makes me scratch my head going, well, how the hell can that happen? Aren't you looking at the same data? It doesn't matter. The numbers will show you where you're doing the best. And, you know, Brendan, one of our viewers, he said, you know, he tried day trading and it just kicked his butt, and he found out that swing trading and longer term is for him. Great, then stick with that. You know, every one of us is going to be different, even with the same education, same information. We'll process it and come out with a different end result. So the only way you'll know what you're doing right or wrong, or the results of it, is to look at the data. So I commend you for 43 data points.
Yeah, well, you know, it becomes muscle memory. I can go through this pretty quick at the end of the day. But, you know, I've got, we do 2 trading sessions a day in my trading room, 9 a.m. to set up the day and 5:30 to set up the Globex. And we rely on that evidence to tell us which of those trades makes the best sense. Yeah.
You know, with regards to strategies, obviously, you know, there's a ton of them out there. There's some that are just purely indicator based. I believe, I forgot the gentleman's name, but there's one of my regulars was sending me in asking about tape reading. Tape reading could be another strategy. And by the way, the tape reading video you sent me, I think, is a joke, and I'll expand on that maybe at another time. But you know, we talk about strategies. You know, that was kind of the topic du jour. Is there one that you find works best, or one that you find are they specifically tailored for different types of markets? I mean, how are you choosing your strategy? And I know you don't stick with it all the time.
It's a great question, and it's really why I suggested we talk about it. The market changes character, and let's just take the last couple of weeks when the S&P was reaching new highs, new highs, new highs. Okay, well, that's great for momentum and trend, but it's not real good for shorting a reversal. What are you shorting? You know, you look to the left and there was nothing there. And you can use indicators and fibs and different things. But the point is that when one of your strategies doesn't offer up any opportunity, then you should have some fallback. You should have something else you're doing, right? So selling credit spreads is a great example of something that you really don't care when the market's not trending. Selling credit spreads is a great strategy then. So what I was suggesting is that a lot of people, as you mentioned when you started the show, they get started and they're a one-trick pony. Once you get your legs with a strategy, no matter what it is, because there's a lot of ways to skin the cat. There's no one way that works. There's a lot of ways. Once you get that one going, then you got to introduce another one, all right? And that's why, like I'll give you an example. I've been working on this gap up strategy, and it's basically very simple. Getting a certain setup on the chart with certain stocks that are in momentum and trend, and we're just buying call options at 4 in the afternoon and selling them at 9:30 in the morning, and we're capturing the gap on 60% of those stocks. Well, that's pretty cool lifestyle-wise for me because it doesn't interfere with my day trading at all, and it's time dependent. I know that at 3:45 I'm going to put a little time in front of the computer, and at 9:40 in the morning I'm going to be back at it. You know, so that's just an example. Now, why is that good? Well, because if I lose money day trading today, maybe I made it up with this. See, it's diversification when you have more than one strategy. It smooths out the equity curve in your trading accounts.
Yeah, I like it. You know, for me, trading strategies is the old adage: if it ain't broke, don't fix it. And you know, last year, as my viewers know, I took a flyer on going counter trend on the market, and of course, that one ended up kicking my ass. But normally, it's just about sticking with what's working at the time. The reason I think the topic is so important is for just about everybody, most people are going to be doing great right now. Why? Because the market's moving one direction, but it's also moving together with a lot of volatility and big moves. What will happen here at some point, I guarantee it, is the market's just going to sit there and go flat and go sideways for quite some time. And you're like, God, there's nothing here. There's no meat on the bone. If I'm still doing my buy and hold long-term strategy, I'm dead in the water. I'm just wasting time. And that, again, you mentioned like going to spreads and things like that. That's great. And then all of a sudden you're going to have a period of time where the market just trends down. It seems like every day it's just another down day, another down day. These things happen. And you know, for anybody who started in 2009, you've been greeted with the biggest bull market ever. Do not confuse brains with a bull market. All of a sudden a bear market comes along, you better change that strategy real quick because it will just eat up all of those gains that you made on the way up. And to me, that's the challenge here, is saying now is the time when I need to switch to this strategy or to that one or to another one. And you know, that takes a lot of time and experience to figure out which one's the right one for you.
Yes, and all I can make sure everybody understands, and this is something that was drilled into me by Dr. Woody, is document. Whatever you're doing, document it. Yep. And then keep in mind, you can't just document your trades. You have to document every time that setup occurred, even when you didn't take it, or else you really don't know. Right. And get that sample size of documentation up, and it's going to pay you huge dividends.
Question from Alan, and Alan, yes, and now I remember. I couldn't remember your name on who sent me in about the level 2 tape reading piece. I'll get to that one. Trust me. Alan says, "Are you constantly testing new strategies and refining old ones through your journal? If so, are you using a separate account with small size or paper trading it?" Great question.
Yeah, good question. So yes, I constantly look for new edge in the market, but you know, you don't need 10 strategies. You only need a few. So I'm not right now. I'm just kind of putting the polish on an options trading strategy, but the gaps I was explaining earlier. But here's how you do it. Here's how you figure out edge in the market. Okay. Number one, you have to start with something that really happens in the world. You know, I know there's algo traders out there and they depend on math to find edge and they can print a little bit of money, but it's probably not going to be you and I. That's high speed. It requires a lot of computing power. It requires a lot of in and out. And in fact, in the equities market, it's order flow that they're getting paid mostly for. So find something in the real world. So let's take this idea I have about gaps. Gaps happen.
Yep.
And there's reasons for them. So, hey, if there's a way we can take advantage of them, let's do it. Second thing is write up a set of rules and then test it backward. See if it worked. And if it does, then you got to test it going forward to make sure you're not kidding yourself. A lot of back-tested strategies don't hold water in the future. So we do something called walking it forward. We take a look at fresh data. And then the last thing you got to do is actually, you can go sim, but I don't think it's worth anything. You got to go in and execute those trades with real money in real small size and see, can you execute? Do you get fills? Does it work in the real world? Because computer simulations are not the real world.
Yeah, absolutely not. Yeah, I know I told everybody I would keep it clean, but my analogy is this. If you're in sim, it's kind of like saying I'm going to open up my adult magazine and say I was intimate with a member of the opposite sex or a member of any sex. It's not the same, right? You're like, oh, yeah, well, I hooked up with that guy or girl. It's like, no, you read page 7 and you got all excited. That is a completely different ballgame, man. The emotions are different when you're sweating and it's hot and, you know, they're in front of you. It's a totally different world. Anyway, I know it's a horrible analogy.
Yeah, it's a good analogy.
Well, so I'm trying to keep the show a little bit cleaner because I have a potty mouth sometimes, so I'm trying to keep it safe. Let's see.
I thought you said this was a happy hour show today.
Well, you can feel free to say whatever you like. I'm fine with it.
No. I'll be polite.
Let's see. For Mike, how far in the money or out of the money do you buy your 4 p.m. calls or 4 o'clock calls?
I'm buying them at the money usually.
Okay, there you go. At the money.
Yeah.
Alan G says, how do you back test and how much of it do you do? This is interesting because this is where I think you guys will get a difference of opinion between Mike and myself. So I'm going to let Mike, you start with that one. Like, how far back do you back test and how do you do it?
Okay, so I use TradeStation's easy language and strategy, their development environment to create the code that allows me to back test. And here's, and I've been doing that for almost 2 decades. Really, before I met OTA, I was a system developer and trader like that. And I have found that if you're looking for something that's been working for the last 20 years, if that's what you want that kind of confidence, good luck. This is a technology business. Mm-hmm. Markets change. You've got to be looking at recency. And that means you got to be willing to change what you're doing. So there's protocols that we follow in system development and testing. And I mentioned one of them just a minute ago, walk forward testing, where we take chunks of data that the strategy was not developed on and see how it performs. That is a simulation of the future. So that gives us a little more confidence. And the other thing is, does it work across a lot of time frames and assets? That's a measure of what we call robustness. I could probably pretty easily come up with an amazing equity curve on one asset with one set of rules. And I can guarantee it's not going to work in the future because it's just not pervasive. Mm-hmm. Yeah.
Years ago, there was a school out of Texas, and one of the guys, or actually there is a school in Texas. Alex, you're asking about an OTA in Houston. Yes, there was one in Houston, but there was a guy who took a class from OTA, and what he did is he went to his trading platform, I believe it was TradeStation. And in TradeStation, you can type in a bunch of different strategies and back test those, right? and see, what this moving average crossover would have done on a daily time frame, and type in different ticker symbols. And what this guy did is he went through and he found one that produced the most unbelievable results. He had a few of those, and he started selling classes because he convinced everyone that his strategy took $10,000 and made $5 million with it over the past 5 years. Never once making one real trade, always buying, with at market and getting away with it, because it's just horrible that you believe what happens on these strategies. The strategies are designed to give you a feeling of, does this work? Now, it's not always going to work. And again, to me, the most challenging part of what Mike's talking about is the ability for us as the brain of the algorithm, if you will, to say, I'm no longer in the market condition where this was working, and I need to pull the plug on it and switch. That's the most challenging thing, in my opinion, is to actually flip real quick and make those adjustments. And I think that sometimes in the back testing mode, it can give you false hope. It can fool you into believing something where, if you back tested a moving average strategy right now, you're doing great. You are dominating with the moving average strategy. Pick your time frames, I don't care. 20 period, 50 period, 200, doesn't make a difference. You're going to freaking do great because the market's up so much. But if you whittled it down and said, hey, I'm going to do that strategy over the last, let's say couple weeks, the strategy is going to change real quick because of the drawdown we had last week. These types of things modify the trading strategy needed, and our ability as the programmer of it all, you have to be able to make those decisions, say, it's no longer valid in this market. That's the challenge and I have with backtesting.
There's no question that that's challenging, and that just adds one more really important check to you should be trading multiple strategies.
100%.
Yeah, I view multiple strategies as a risk management tool just as much as it is an opportunity tool.
Mm-hmm. Yeah, I agree. And then again, when you're that you're in a different market environment, maybe you correct a little bit by changing your position size. So you hedge some of that risk as you're determining what that new strategy might be. And as that strategy is working in your favor and everything's moving great, then yeah, maybe you start to build bigger positions and ride that momentum, just like you'd add to a winning trade. And the market's moving in your favor, add to a winning market, if you will. All right, this is a total curveball here, but let's see. This is from Brendan, and Brendan asked this to every guest. I probably should just incorporate it into the show. He says, does Mike own any crypto?
I do not.
Oh, that's it. You're done. You're dead to our group. I'm kidding. No, we're no, it's okay. I'm out of curiosity. Why is it? Is it because it's too risky? Is it too foreign, or you just got a horse that's running strong? And why change horses?
Yeah, there will be a day probably, and you could call me late to the party on that, but I'm comfortable and confident with the things that I do in the market, and to take on something new that I don't understand is going to require a lot of bit of time devotion. And quite frankly, right now where I'm at, I'm doing fine, and I like my lifestyle. Yeah. I don't want to work 20 hours a day, Yeah, so maybe one day I'll get into it, but it's got nothing to do with risk or anything.
I'm just curious. It's funny because it's so new. I mean, at least for the mainstream, it's so new. This is one of the issues I really have with Online Trading Academy. Honestly, it pisses me off. I built this class in 2017, which was designed to say, hey, here's how it works. Here's the functionality. Here's the utility. Here's how we can use it for this, that, and the other thing. And they're like, oh, no, it's too risky of an asset class. We don't want to talk about it. I'm like, well, we want to convey the aspects of risk management and show people how to be careful with it. Like, no, we don't want to talk about crypto. So for that perspective, I've been upset with OTA on that one. But hey, I get it. It's one of those new things, and hey, there's a new asset class popping up all the time. It was credit default swaps, and then it was warrants. People were hot on for a while. Crypto is the main topic du jour. How about market segments? Are you a broad market guy, or are you focusing on specific market segments? Like, for example, the cannabis industry stuff is super hot. So is alternative energy. Are you broad picture, or do you go down to the weeds like that?
No, I go into the weeds on the equities and the equities, but I'm trading via options. The only thing I'm broad with is the S&P futures, just because I've been creating that trade plan for, let's see, I started publishing that in Power Trader Nation back in, I guess, 2009. So that's been about 12 years. Yeah.
Wow.
11, 12 years. So that's the only broad asset I trade is the index, the futures. But when I get into options, I like alternative energy. I like solar. I like the the move toward electrification. Obviously, this year, healthcare and biotech has been good.
Yeah.
Solar. So yeah, I'm not. I do look at the sector. In the short answer, yeah.
Good. Tell me a little bit about your current projects. I know you're always one of those guys who's always you got something in the works, and I know you do the dailymarketforecast.com. So maybe you could walk our viewers through a little bit about what you're up to now. I know you were heavily involved with the online community at OTA, and now you're off doing your own thing. So tell me a little bit about what you're up to.
Yeah, so the Daily Market Forecast is really a turbocharged version of my old blog. Mm-hmm. And the blog was just a text document that showed you where were the volume levels. Core strategy is great at looking at the chart patterns, but it never entered into the equation volume. So I kind of married the two and used volume at price. And then when I felt it was time for a change and I moved on, I created more of a service out of it. So here's how it works. The members in my room, we have 2 Zoom sessions a day, 9 a.m. to set up the day trades, 5:30 p.m. to set up the Globex trades. So, they get two trade plans, 2 Zoom sessions, and that's just for the day trading of the futures. When we're in our daily Zoom session, we're looking at credit spreads on the SPXW. We're looking at gaps on individual equities in hot sectors. And so that's pretty much where we're at. Yeah.
And with that, when you're in those rooms, is it just you lecturing? Are you sharing your screen and walking through, the technical setups and drawing the lines and things like that?
Yeah, I'm live trading.
Okay.
They're watching my charts. They're watching me win and lose. In fact, today it's funny. I had I lost a big chunk of data that Excel didn't auto save. I had the document on auto save and it didn't save it. And so when I recorded my session this morning, I was clearly agitated. So just for fun, when I posted it on the website for review, I named it the hot mess.
I like that. Wait, so you actually show your losing trades too?
Every day, man. You can ask anybody.
Take that, Sam Seiden. There are people out there that are immortal, unlike you, who never lose. But anyway, we'll leave it at
that. Yeah. No, we have drawdowns, in fact. It's not just a single losing trade. But hey, again, this is the reality of trading. Nothing is a 45-degree angle in your equity curve for very long. So get more than one strategy going. And you'll see it flatten out a little bit better, or not flatten, but stop the drawdowns being as deep.
Awesome. Guys, I have the website up here. It's thedailymarketforecast.com. I actually had it on his name the whole time, so if you guys saw his name on there, you can do dailymarketforecast.com. If you're interested to learn more, he's got some free signups. I'm sure he's got blogs and other content out there for you to join. We had Dr. Woody Johnson on the program last week, I believe, and I think he's working with you as well, correct?
Yeah, in fact, we just launched a 6-week course with Dr. Woody, Secrets of the Peak Performance Trader, and that'll be available as a recorded version in about 5 weeks. But if anybody does go to the website, I just want to point you to one free video that's going to be very, very valuable to you. Under the menu item Video Lessons, just scan down to my free course on the 7 top risk management rules. Everybody needs to look at these rules and incorporate them into their trade plan. It's my gift to you.
Nice. Awesome. Love it. There you guys have it. It's on the video right now, but again, for those listening to the podcast, if you go to dailymarketforecast.com, you click on videos, and you'll see there's a whole bunch of videos he's got on there. So, awesome. Hey, Mike, well, thank you so much. I know it's the maiden voyage for you on this program. Next time, maybe we'll do a bunch of chart analysis, but I wanted to get the people familiar with you, share you with my group out here, and I appreciate you coming on.
Yeah, I love this time slot on Friday. Have me back anytime.
All right, it is the best time because have a nice little cocktail and enjoy the beginnings of what I hope is going to be a great weekend for all of you out there. So, Mike, have a great weekend. Thank you so much for joining us today. I apprate it.
I appreciate it. Thank you.
All right, take care. Guys, that was Mike Siewruk. He's got a ton of experience out there. One thing I really enjoy about it is his his diligence to having a very rigid set of criteria to filter the markets, not just filter the markets for, but to make those trading decisions on. So I thought you guys might enjoy that. And again, you can find out more information by going to thedailymarketforecast.com if you'd like to know any more. Mike will probably bring some whiskey next time. Let's see. So for Alan, I wanted to do a more in-depth piece on this, but Alan was asking me about reading the tape. And here's my quick and dirty, just simple answer to the video, Alan, that you sent me on why I don't think it's worth its salt, and it's very outdated, and I have to just laugh at it. And it's this. If I were to show you, and maybe I can even show you the video. I think I might have closed the video. Yeah, damn it, I already closed it. If I were to show you a level 2 screen, or what's called an order book, or a matrix, or a dome. Let me bring up my trading platform here and see if I can bring up a matrix for you, just so you have an idea what I'm talking about. And let's see, where is the matrix? There it is. So bear with me as I bring this one up for you guys. The markets are closed right now, so we'll have to just deal with data as we have it. And I don't think I can bump this font up, so that's going to be a challenge for us. All right, well, either way, I will do my best here as we go through this. So here's a picture of what's considered a matrix. Now, a matrix, all it is just look at this as a ladder of price. And let me see if I can bump these fonts up. I hope I can. I think I can actually really bump it way up. Font. Oh, now you're gonna love me. 20 font bold. Boom. Okay, perfect. Here's why I don't believe that the video of the guy that you sent me is worth its salt. So if we look at this right here, for the viewers that don't understand buyers and sellers or matrix or level 2, what I'm looking at here in the red are all the people who are looking to sell with limit orders. They're literally sitting out there saying, hey, I would like to sell, right here where my cursor is, this individual's willing to sell 4 contracts right now if you want to pay $38.85. Just above that, there's a guy at $38.85 and a quarter, so 25 cents more, he's going to sell 3, and so on and so on. So you start to see the lineup of sellers in the marketplace. In blue, these are all buyers lining up with limit orders. So you got one person here, it says the number 2 right where my cursor is. That's somebody who's saying, I will buy 2 S&P futures contracts at $38.84.50. If you want to sell them to me, I'm willing to pay that price. If we went off this information alone, with knowing that these were actual 100% true numbers, meaning there's no bluffing, there's no manipulation, there's no iceberg orders, no reserve orders, then I would ask you, which way do you think that this market is going to go? Well, it's not a big imbalance here, right? You have 2 buyers versus 4 sellers, so it's probably not going to move much. But what if this was a 40? Okay, so you see right, the number 4 is in white. What if it was 40 people wanting to sell at $38.85 and only 2 people wanting to buy at $38.84.50? What do you think would happen with price? Where is it most likely to go? If you have 40 sellers and 2 buyers, where is it most likely to go? The answer is most likely to go down. Yeah, absolutely. The problem is none of this is real. You don't know if that's 4 or 40 or 4,000. Right? It's a reserve order. And the argument that this gentleman makes in his video is, if I have 40 sellers and only 2 buyers, it's going down. That is a rookie mistake. Here's why. It goes down, I get stopped out. It's a rookie mistake. If the screen shows you 40 sellers and 2 buyers, instinctively we think it is going to go down. But what you don't know is the person that's sitting at the bid with the 2 is the same guy who's flashing out those 40. He's trying to create the illusion that there's a ton of sellers so that the retail guys, they start selling at the bid price. He's sitting out there saying he wants to buy 2, but he'll sit there and he'll buy more and more and more and more and stay there just displaying 2, but he's buying hundreds or thousands of shares or contracts. So people are using that level 2 to scare the fish into the net, if you will. When I was, and I'll give you a good example of this. So when I was back trading level 2 on the floor back in the late 90s, what I would do is if I wanted it to go, up, I'd buy 1,000 shares at market. And then what I would do is I would put an order at the bid to buy 10,000 shares or 20,000 shares. Because what I wanted to do is create the illusion of massive buyers coming into the market to push it up because I was already long. So there's multiple ways you can use that thing to game the system. If I'm an institution and I want price to go down, right? I want it to drop because I want to be a buyer at a lower price, I'll flash a big block of shares and try to push it, convince everyone to sell, and I'll be sitting there buying it all. And they're all, it should go lower, it should go lower, it should go lower. And I'm going, I'm just sitting here to buy all these shares because that's what I want to do. But I bluffed you into selling to me. If that makes sense. So that's the reason I don't really believe in level 2 anymore, is the ability to bluff and game the system. You or I, probably not going to game the system too much. Back in the late 90s, I had unlimited buy power. So I could go flash whatever size I wanted on those marketplaces before the SEC cracked down with regulations. So to me, it's very difficult. Not saying it cannot be done using level 2 or using the matrix. The matrix is good because it gives you a snapshot of what liquidity looks like at that moment in time. But boy, I tell you, saying that you can make a living trading off that level 2, I'd be hard pressed, and I'd really want to see their trading results. I really think that those people who are doing that are making it up. J. Homer says, I only use the matrix for order buys and sells and see my positions. Yes, I love it for the position side of things. Absolutely love it, because if you have a trade open, you'll see your P&L on the left-hand side of it running. Let me see if I can show that for you. I don't have any open positions on this one right now, so we won't be able to look at that. But if I show you this, over here it says open P&L. If I had some open positions right now, you would see this running up and down, and I love that fact. It's a really cool feature of the matrix. Certainly better than the dumb. Can game with pinks? Can game with pinks? Not sure. Not sure what the heck that means. All right. Let me see. Were there any other questions that you guys have any before I wrap up for the day? Let me see. Okay, so this is more of a critical one. Not critical, but it's a touchy subject because I am certainly no tax expert here. I just have someone do my taxes for me. Of course, there are specialty organizations like OTA Tax Pros that do it. Michael says, I'm a student of OTA and core, futures, and upcoming options. The past year, I've greatly accelerated my trading, including heavily in the crypto space. I've looked at the criteria that the IRS looks at and feel I should create an LLC. Any recommendations on who to go to for help setting this up, determine what state to do so, pros and cons? I mean, my natural inclination would be to send you to OTA Tax Pros. They're specifically looking at trader taxation. But I would say you want to find a CPA that understands trading and trader taxation. I mean, that to me is pretty important when you're making this decision. I do think that if you are someone who's making a lot of money at this and look at this as like a career path or something you're going to do full time, you should have a corporation. You should have an entity, if you will, whether it's an LLC or a C Corp or an S Corp. That's up to you. I do LLC. I've had C Corps. It all depends on cost and what kind of structural security you're trying to get through that corporation, as well as what benefits you want out of the corporation. Some corporations like to write off health care and other expenses. So I can't get into that aspect of it, but certainly find a CPA that you're comfortable with that says, okay, this is the right type of entity or structured entities, because sometimes you have an LLC, which is part of a C corporation, right? So you're protecting yourself with layers, and there's all kinds of different benefits to having a structured series of entities like that, but that's beyond my area of expertise. I know the basics, but certainly go to someone professional like OTA Tax Pros. Brandon says, does incorporating your trading make you a professional? That's a tricky one. Some firms say yes. TradeStation says yes. Other firms just leave me alone. Right, so it depends. Technically, I believe it does make you a professional, but that's a gray area for some corporations. Brian K says, Bucks or Chiefs? Please come on, Chiefs. I do not want to see Tom Brady on that podium yet again. I want to see a good game. I think it's going to be a good game, but I think the young guy is going to win. I think the team overall is better for Kansas City. All right, before I dive any, I have a bunch of questions. Let me real quickly go into this one here because I can answer this one before I go in an hour show. I have to be in a meeting in 15 minutes, so I have to go to it. But here's last one. Yes, go Niners, go Niners. I'm out of it, bud. Okay, Jeff, this is a great question. So in regards to SPACs, for those that don't know what SPACs are, you can check out the video we did a couple weeks ago. It just says SPACs, I don't know, I think it's a necessary evil or something like that. You can check that out on the TraderMerlin YouTube channel. It's in the archives. He says, I believe VIH is the symbol for the future BAKKT that I am in. I like this company, Automotive, that manufactured EVs. The SPAC is VCVC. Both these charts look the same, $3 for months and months, and then a jump to $16 for a week. My question is, are there charts of other companies to try to compare analysis to, or do you say to yourself, I like this technology so much that I think it's worth investing a certain amount of money in? I always like hearing the other side of the coin. So let's check this one out. For the answer for me is very simple. I want to be a part of BAKKT and also Coinbase's IPO if I can find some way in there. To me, those two are probably going to gain a lot of fanfare because they're going to bring an air of legitimacy to the entire crypto space if they haven't already, but now they'll be publicly traded. So I wanted to jump in. As far as me determining what's a fair value, I don't really know, right? I haven't looked at the numbers of Bakkt, and I don't know what VIH is doing, but here's VIH. Here is the ETF, the SPAC that is buying into BAKKT. I'm long at 15, so obviously I'm happy right now at 16.92. It's been a good couple of days. But, is this overpriced for Bakkt? I don't know. So to answer your question, I really am just buying on saying I'm going to own this thing. I'm going to own it when it comes out because I think it's going to move up a lot more once the mainstream population hears about this Bakkt exchange and now it's going to be public. Everyone will be clamoring for it. That's my thought. As far as VCVC, here's another one that you mentioned. Huge jump up. This is the problem with the SPAC. We don't know if they're making a wise investment or not. So we could go out there and look at the numbers on what this 10x Capital Venture paid for or is paying for that automotive company you're talking about. The risk here is that they overpaid. And all of a sudden, these shares are now way overinflated for the value of the underlying that they bought. That's something that is a total gamble on my part. I don't have a huge position. I have 1,000 shares of VIH. But unfortunately, with these types of situations, I normally don't like IPOs. I normally don't jump on IPOs. I think they're a gamble. But I do believe long-term that Bakkt could be the hub of transactions in the United States, and if they do it right, for the world. I mean, if you look at, they have ICE and New York Stock Exchange backing. You got the two of the biggest exchanges in the world backing a crypto exchange. To me, that gives you a much greater chance of success out there. Yes, Brendan says Coinbase is the largest brokerage in the world in terms of client base. Absolutely. I mean, when they do an IPO, man, there's going to be a monster IPO. All right, that was it with regards to questions. I think I may have had one or two more, but I'm going to try to save those for next week. Let's look at the economic calendars for today, and I'll show you what's happening next week. Here, and by the way, don't leave yet. I'm going to tell you why I'm selling every Ethereum token I have by Monday. Every one of them. I'm going to sell 100% of my position by Monday. I know you're like, what in the hell are you talking about? I'll explain it all in just a minute. Let me get through the announcements. Economic calendar for today. I wanted to put this one up because it looks kind of painful for Canada. Their unemployment rate was expected to rise slightly. It rose from 8.6 to 9.4%. Not good for Canada. This actually caused a move up in their currency today. Unemployment change or employment change dropped significantly as well. That was a pretty bad miss there with regards to employment in Canada. So sorry, Brendan, it's not looking very good up there. U.S. did really well, though, right? We came out with unemployment numbers of 6.3% versus 6.7%. So that is obviously a very positive sign for the U.S. economy. What that means, though, is that the Fed may actually start backing off on their easing talk, right? If unemployment is dropping that quickly, it gives you a sense that they no longer need to keep the pedal to the metal. All right, economic calendar. Here's what we got cooking for Monday's trading session, February 8th. You have nothing for the U.S., and most of those announcements aren't really major market movers, so nothing really to speak of there. Now, what I was just mentioning, I'm selling 100% of my Ethereum stake I'm going to do my best. Actually, tonight I'll probably be working on that. Not at the same time. It's not the same this time. I'm taking a chance. I'm taking a chance on it. I understand. Here's my logic. I will bring up a chart of Bitcoin just so you guys can have this one in your face. I believe. Let's go here and just bring up BTC USD. Trust me, I'm going to buy back in heavily. I'm absolutely going to buy back in. But I want to make sure that I don't have the same thing happen to me. Here is a weekly of Bitcoin. Now, the reason I bring this up is I want to focus on this area right here. Right? This was the spike that happened in 2017. Now, actually, it was 16, started 17 was really just the monster year for Bitcoin. You'll notice that Bitcoin hit a high back in 2017, at least it says on this, at about $20,000. What happened the day that Bitcoin set an all-time high. Oops, there you go. I didn't have my chart up. To the day was Bitcoin futures. So Bitcoin futures came out, and I'm not saying that Bitcoin, that Ethereum's going to suffer the same fall, like it's going to go, like Bitcoin went from 20,000 all the way down to 3,000. I don't think that's going to happen. But Bitcoin fell 50% in the next 7 days after Bitcoin futures came out. Right? So that has me thinking, if history is any indication, and this is a weekly time frame, let me just see if I can bring this up on a daily time frame to see exactly how many days and how sharply it fell. So bear with me, I'm going to have to scroll through a whole bunch of chart data here. That's 2000, here's 2017, okay? So I believe the December 17th was when those Bitcoin futures came out. Look at the dead high for Bitcoin back then was December 17th. It literally was to the day. And then all of a sudden, over this next 5 days, it plummeted with huge volume capitulation a week later. I think that we'll probably see this similar pattern happen with Bitcoin. With Ethereum. Ethereum futures start trading on Monday. And I want to get out because I think you look at this move up in Ethereum, it's amazing. I love it. This has been just an incredible opportunity for anybody who's been holding Ethereum. I love the project. I believe it's going to go much, much, much higher. But I think you're probably going to see a pretty significant sell-off over the next week or two because now institutions can short Ethereum. So my worry is that I'm going to be holding it at 1,700 and all of a sudden it drops back down to 1,000. Great. If that happens and I'm out, I will buy back I'll buy back more. Right now I've got about 61 Ethereum, 60 and a half. And if I can get out now and lock in that capital and buy back in when this thing drops to 1,000, I'll now be able to buy like 80 Ethereum because I'm buying at such a steep discount. So, Alex, I'll probably be scaling back into this one because I don't know if it drops, how far it's going to drop. Institutions now, the gate is open for them to short. And when you have an asset class that's moved 250% in 3 months, there's going to be some people wanting to short that thing thinking it's way overdone. I think long term, you've got more upside potential out there for Ethereum, but I know you guys are going to call me crazy. Who knows? Knowing when I telegraph or tell you guys these big things I'm doing, it'll probably jump to like 7,000 on Monday right after I get out of all my Ethereum. The typical. All right, cool. That's it. Brendan says, I will just accumulate more. Why sell what you got? Because I want to buy back in at that lower price. I want to buy back in at a lower price. Even if it drops from $1,700 to $1,500, I can still buy $200 extra worth of Ethereum for that amount of capital. So, and I'm happy to pay the commissions. And it might be, Brennan says, I think at this point it's an apples and oranges scenario. It might be, but it's still the first time that there's futures available on the CME for Ethereum. And I know that that's going to add some element of pressure to it. So, part of me hopes I'm wrong and it keeps on going. The other side, of course, says I hope I'm right because I don't want to be in cash as Ethereum continues to go parabolic. All right. Cool. All right, guys, that's going to do it for me. I think I can get out of here and actually make it to my meeting on time. I hope that you enjoyed Mike Siewruk's conversation today about trading strategies. It's important that you always adapt and modify these things. You don't get stuck. I think that's where algorithms and black box systems do poorly is they don't really change. You have to wait for the developer to go in there and change all the settings to configure it. But, I do think that you're going to see people who adapt their trading strategies do better in the long run because they don't get caught holding dead periods of time and wasting their money. To me, it's always about putting your capital to use and helping grow whatever capital is that you have. Taxes, yeah, well, my CPA is going to be a busy man this year. I won't tell you that. All right, guys, thank you so much. Hope you enjoyed this week's shows. Yeah, thank you, Big Eb. It's been fun having all those guests on. I'm going to work this weekend and try to get some guests. As I mentioned, I'm more than happy to bring on just about anybody onto the show, unless I know they're a scam artist, like certain people that are trying to just take money and not give anything of value. If you know someone, you read a book, an article, or something, you guys can all help me out by just reaching out to that person and say, hey, email TraderMerlin@gmail.com. He'll have you on his show to talk about your book, your school, your whatever. I'll pretty much have anybody on. Like I mentioned, there's a few people in this industry that are just unscrupulous scumbags that don't deserve to have airtime, and I'm not going to bring them on. But I will do my research on anybody I bring on the show just to make sure I'm not bringing on people who are scam artists going to rip you off. All right, guys, that's going to do so much. Is it David Warner next week? I think he is next week. I think I actually have one or two people scheduled. I think David Warner is scheduled for next week, but I'll have to look. I got so many things going on, I can't tell who I scheduled when. All right, everybody. Hey, thank you so much. Cheers. Have a fantastic weekend. I hope you all have a great weekend. Safe. Have some fun. Go do something exciting because we've got to live our lives. Until then, happy trading, everybody. I will see you Monday.